Did we miss the bottom of the stock market? What is going on? We've got these oil crises, we got the coronavirus, we got people not spending money, we got global shutdown. And yet, if you look at the financial markets, it's like as if we're doing great. We should be able to recover in the next couple months. So, did we miss the bottom? So in this video today, I want to reveal that I actually think we're so far from the bottom and explain why. And also, I want to talk about what opportunities may exist and what you could be watching out for. And I'll explain as to why these stocks in particular are interest. So let's get on with the video. Why do I think we have not hit the bottom of a bear market? This year, we've got a global lockdown because of the coronavirus. We don't have people spending money. We also add on top of that oil crisis where there's an oversupply of oil. Prices of oil has dropped to a crazy amount, which hit negative territory, which is insane. It was never happened in the history of the entire world. So I've been through many bear markets. I've been through the 2002 tech bear market when, all these tech stocks were like at its high and it started tanking because everything with .com was always skyrocketing. Of course, that's unsustainable. So that was back when I was in university. So that gives you a sign how old I am. And then there was another bear market shortly after that. There was the global financial crisis, which was around 2008. Then we had a bear market in the oil prices in 2015. We hit some correction with the Brexit in 2016. Now, typically a bear market would last about 14 months, and this is on average since World War II. In the grand scheme of a bull market, which is where stock prices continuously not like go up linearly, but over time keep going up and up, a bull market ranges on average around 6 years. Now, we've recently just ended the longest bull market in history. So why do I think we have not hit the bottom of a bear market? Well, now I'm going to have to give you a bit of a history lesson on what bear markets are. The first phase is when stock prices drop dramatically. There's a lot of turmoil in the economic indicators, like the economic indicators being like unemployment rate skyrockets, and the economy is like slowing down, contracting, and we're seeing high unemployment rates. So then the stock market just starts reacting and it starts plummeting. The second phase is when speculators start jumping back in based on false hope. The market starts rallying, it starts going up. And the third phase is when all of a sudden the real numbers come out. And corporate earnings, like the companies are not earning as much. People are losing faith in the stock market, and the stocks just continue to go down. Why is the market rallying? It's recovering because of false hope. And I suspect it's stimulated by stimulus in the economy, hopes that the markets are going to open again, that people are going to start going back to normal lives. So this is creating an environment of hope. So the stock market is reacting accordingly. So here's the real numbers. Data collected by small businesses like LendingLoop has surveyed more than 100 small businesses, and they found that 2/3 of the revenue, like meaning the income generated by these small businesses, have dropped by 50%. That's crazy. Canada has lost more than 1 million jobs in March alone. In the US, 26 million people in the US are unemployed. So there's a big discrepancy between the financial markets versus the rest of the economy. So if we are not at the bottom of the stock market, then that means that we are only in the beginning stages of a bear market, which means then there's still plenty of opportunity. So don't lose faith in watching the financial markets and saying you've completely missed the big drop in mid-February. So I want to share a few stocks that I'm watching for and why I feel like these stocks have a lot of things going for it. And by sharing with what I know, I hope that gives you insight to what to look out for in the upcoming months during this bear market. You're going to see opportunities. The latest stats have been showing that people are spending a lot more time on gaming and technology, which makes sense because we are in a global lockdown. So the first stock I want to cover is Microsoft. I would say Microsoft is almost like a recession-proof stock. Since the CEO, Satya, took over the company, Microsoft has completely changed around its business model. It's grown its revenue year over year over year. Its dividends are increasing over time. We've seen crazy growth in the company, which has been reflected in its stock prices, and it's predicted in the future that its earnings are going to still increase because it's got LinkedIn that it hasn't even really capitalized on. It's got Azure, which is its cloud computing. And like, let's be frank, okay? You use Microsoft because you've got old files in your folders where it's Word 3.0 and you can still open it in Microsoft 365 right now. What type of operating system allows you to do that? Now, Facebook. Why did I choose Facebook? Simply because it has no debt. It can completely ride this bear market for a long time because it's a cash cow. This gaming industry for Facebook could actually explode for it. I actually have Oculus Quest. I'm a bit of a nerd, so I own the VR set. It's absolutely unreal. I've since before the coronavirus hit, I was playing the VR set like once every 3 weeks. Since this lockdown, I've definitely been one of those people that's been spending way more time on gaming. It's also spending a lot of money on artificial intelligence, which is probably why you get those creepy marketing ads are following you everywhere when you're on Facebook. It's also got Facebook Messenger, which hasn't actually been leveraged. It's got untapped advertising sources through the Messenger app. It's got WhatsApp. It also has Facebook Marketplace, which is a great area for selling all your used stuff. So it's just got a lot of stuff going for it above and beyond its advertising revenue. So Facebook with no debt, with a lot of potential sources of revenue. It's people are still using it while they're locked down. That's why Facebook is one of the stocks that I'm absolutely going to be buying in 2020. There's two particular bank stocks that I'm watching. That is TD Bank and Royal Bank. They have the lowest exposure to the oil crisis. Also, TD Bank and Royal Bank, every year it's increased its dividend. So that makes it a very safe stock to buy. And so when you buy this stock, you'll actually collect a paycheck every few months because that's what these banks do. So right now, the yield on these dividends is actually quite high. Of course, it is not something that you should just jump right into these bank stocks because we're going to be facing the real numbers with the economy slowing down, with find out how many people are losing their jobs and how many businesses are not going to do so well over the upcoming months. So that means that banks are kind of like not the best things to jump right into, but I think it's worth watching for. If you're planning to invest in the stock market, I would say the number one rule right now is to look for companies with little debt or has so much money that it can cover its debt because it needs to be able to survive this bear market. And if you look back at history, it could last on average 14 months, not 2 months, but 14 months. And with the coronavirus, I would say that until a vaccine and then there's massive testing, this could last for a very, very long time. Hopefully, this has been super helpful for you. And if so, please subscribe below. Let me know how you feel in the comments below, and I'll talk to you next time.